We're going to kind of touch base just on ETF Pro here real quick. I've gotten a couple questions around that, and again, just figured it would be worthwhile to review that. ETF Pro is really a curated list of where one can hunt and where to stay away, right? So the longs, best places to have exposure within a portfolio across the global macro landscape, and the shorts are really places to stay away from. So if you can go short, then great. That's where you can go. Use them to as key pieces to go hunt, right? And on the short side. But again, if you really are long only or don't have that capability, or you're new to shorting, then just staying away from those pieces of the puzzle or those pieces of inventory, excuse me, that are inside of the ETF Pro short side. They are color coded green and red for a reason. Green meaning go, and red meaning stop or stay away from. So this is. I think the interesting thing here, and certainly where we've been in the chop bucket for the last 15 months, the keys will cut losers relatively quickly, and so what you see in ETF Pro now in this environment versus what you might see in a quad 2 or quad 1 environment might be a little bit different, especially from again, the key thing here is where the trend is. So he's going to cut things if they break trend, and with volatility elevated, that can happen a lot more quickly than in stages where volatility is sort of sub 19. What you will receive from an ETF Pro is a trend duration risk range weekly. So that comes out on Monday morning. The trend duration is a longer look, incorporates a longer look back period. So the top and bottoms end of those risk ranges fluctuate less frequently than the immediate term risk range, which is what you get every day from the risk range product. And so again, if you compare something like your XLK that's in there every day versus XLK that's on the short side in ETF Pro, that's why those don't line up. The XLK immediate term is what is based on yesterday's closing price and the volume of volatility as of close yesterday, whereas the trend range looks back at a longer term, basically 3 months or more look back window to get the top end and to get the top and low end of the risk range. But what I will say there is that, again, to keep in mind that any big spike in price or volume or volatility, that will impact the ranges. So it's worthwhile to be very cognizant of these factors when making decisions throughout the day. But that doesn't mean that those risk ranges get stale once they're published. I mean, obviously these risk ranges are dynamic. So there is a component of basically of movement, right, from Monday to Friday. But that's where if you do have components or kind of screens on inside of your window around tracking price, volume, and volatility, that's going to help you assess where those risk ranges may go. So I'll just use XLK as an example. If it's trading at 142, if it closes at 142 last Friday, I forget where it closed, but I'm just using this as an example. The top of the range was 145, but the price moves to 145, then it's likely that that top of the risk range is kind of slightly higher than where it was on Monday, right? But again, these are all things where you can absolutely they're fantastic tools in terms of trying to understand where to go hunt and when to actually make those decisions to adjust positions inside the portfolio. I think the other really critical piece as well within the ETF Pro, and I've mentioned this on Weekly Notebook Review a couple of times, is that you got to review the week over week directionally changes. So reviewing whether a piece of inventory is making a higher high or higher low, whether it's maintaining, basically within a bullish trend, that's if it's making a higher high and a higher low inside a bullish trend, then, that's something that you should be, highlighting, circling, and potentially adding to at or near the low end of the risk range, or certainly within the lower third of the risk range, depending on your current position size. So if you're at a minimum size and something's putting in, basically bullish trend and putting in higher highs on higher lows, then you're likely going to be a little bit more aggressive as to when you add it, and certainly start to act at that kind of like lower half or lower third of the risk range that you receive. And if the risk range is consolidating as well, kind of, that indicates like shrinking in width, then, track and monitor what Keith is saying on the macro show, what he's doing within the re-rank product, within the RTAs. It'll be a really helpful gauge to assess or to kind of execute or make the decision around the potential, the sizing and whether or not to actually act on that piece of ticker, right? On that particular ticker. So again, you can kind of you got to kind of, take all of the different tools in your toolbox and apply it. But ETF Pro really can provide a really great kind of single tool to help narrow down exactly, of all the thousands of ETFs out there, the ones where we at Hedgeye think are the best ones to go hunt or to go stay away from, right? So just wanted to kind of finish up with that. And if there's any questions, please leave your questions down into the at the bottom of this queue, or ping me on Twitter, what have you. It's happy to answer them and happy to address them on additional episodes, or if there's other kind of products that you want to kind of have a little bit of a deeper dive into, happy to do that as well.